Good morning, all. CamelbackTrading.org. Coming to you this Thursday morning, July 30th. We're looking at the last 4.5 days of the SPY ETF's market profile here on Window Trader. And right now, with a little over an hour to go prior to the opening, everything that the bulls worked so hard for yesterday, they are giving up, possibly. After coming out of the lower distribution that they spent 3+ days in to break out, we're right back in it. I think the funny thing is, well, not funny, but so yesterday we had an opening drive. They had a ton of things to lean on. Here's the Fed, 2 o'clock, reversal bar, then the press conference. Everything gets digested, and we go out with a price probe. And then the headline this morning, markets down on Fed grim outlook. Well, I don't think they said much after 4 o'clock, so I don't know, what we're seeing here as opposed to what was said yesterday. Just shows you the market, how emotional it can be, how these machines are mindless and do things on their own. What it really is doing is right now about to mess up my, possibly mess up that huge move I'm talking about if we keep trading in this range, although I still don't think we're going to. The buyers had everything in their power after yesterday's close. Their next step was to take out a weekly high and a poor high and attack that gap and get to that 330 level. Well, they just made their job a heck of a lot harder, as everything they had to lean on, and I mean everything right now, is about to go away. Now, we still have GDP coming out in the next 10 minutes or so. Again, I'm doing these videos early because I have a larger room to deal with, plus my granddaughter's here that I want to spend some time with prior to the opening. So I'm sure these things will change once GDP comes out. And don't forget, we have the big tech earnings after the close today, which will also set things up for the end of the month tomorrow. So destinations for tomorrow. Well, right now, if we gap lower, we'll use yesterday's low, incredibly I'm saying this, of 322.08. Then, right now, our next upside destination would be my pre-market high of 325, or overnight high, 325.71. Yesterday's high, 325.73, and then 327.23 weekly high, and the huge gap that has to get filled. For the downside, we had a lot to lean on, but as of right now, the price probe is being firmly rejected. H's price spike at 324.30 so far seems to be being rejected. The afternoon pullback low, 323.23. We did have a trend day. We had single prints, 323.16 to 322.97. Lowest accepted price of 322.76. And then yesterday's low of 322.08. Below that, we have 320.85 daily low, 320.78. 320.60, 11 wide, and then 319.25, the weekly low. That's the huge one that we have to deal with, right? If the bears want to stop the one-time framing up. Now, so what's the game plan? Well, again, a lot's going to probably change once 8:30 rolls around. But as of right now, looking to open below value at the lower end of balance. Now, if we are to gap lower, I will take a put play. Again, I take it based on, the range of the gap if we get it. If it's 50 cents to $1, I will take that put play and then see if we're able to take out the weekly low. That'd be the next huge destination to the downside. If it gets rejected and comes back in, I'd be out. Remember, if we get into M's range from the 28th and get acceptance, there's a good chance you'll trade that entire range. So that would be a put play. If we open at the lower end but don't take out yesterday's low, remember, we're one-time framing up for 3 days now. So can you take a call play against yesterday's low if we open around here? You can, but I would definitely use yesterday's low as my out. Or in the next hour, if we're to open above the lowest accepted price, same thing, or above the afternoon pullback low. If we are to rally after the GDP number and you do have these things to lean on, then you can take these call plays, but I'd probably be out probably below the lowest accepted price. Again, early plays. you're in camelbacktrading.org's room, voice channel room, you're going to see exactly what we're doing as the market is opening. And then on the charts, remember last night I said the bulls did everything so far. They were above last month's high. They were above settlement. Well, right now we're below last month's high, but above settlement. So 2 days to go in the month, still very healthy. The bulls would like to close above 323.41. Weekly, same thing. One time framing up 3 weeks with 2 days to go. Bears want to take out last week's low of 319.25. Not only does that stop the one-time framing up in the weekly, but puts you firmly into the 8-week balance. Bulls don't want to see that happen. And then on a daily, same thing. Even though we're one-time framing up 3 days, to me, it's just a huge balance of 11 days. Right? 319.09 is the bottom of that balance. So it remains to be seen. The bulls worked so hard to do what they did yesterday, only to see right now possibly give it all up. It's not a good thing. Good luck trading today. Have a great day, and we'll recap at 4 p.m.